right, looks like we are up and running. What's up, everybody? Jerry back with Dipping Up Trading, coming at you with some live market price action today. Joining me, I have Jay from Flashpoint Capital. Jay, what's up, man?
What's up? What's up, buddy? How you doing?
Doing good, man. Hanging in there. Just checking out how the market's doing. It looks like we're having a little bit of a rebound. Have you seen kind of anything crazy on your end as far as like unusual call action or puts or anything like that?
Ye- Yeah, man. I've actually seen a lot of unusual activity as of yesterday. I found it very odd that I saw the way you kind of identify unusual options is um, you look at the open interest compared to the volume on any particular day, right?
Mm-hmm.
And if the volume is significantly higher than what the open interest is, that's pretty unusual, right? That means one way.
Oh, my fault, dude. I had my volume turned down.
I'm over here like, what's going on?
No, you're good, man. No, no. So I was just saying, it's interesting too. Like piggybacking off of what you were saying with the like the calls. Like it's like people's last hail mary. You know what I mean? To try to hit it big before the following week and stuff like that.
Yeah, yeah, and a lot of times, if you're kind of, especially if you're looking at AMC, you're looking at a lot of manipulation. They have this whole cycle theory going on, where the cycle is pretty much spot on. Where I'm that can net you some pretty good pretty good money compared to actually owning the stock.
Yeah.
So a lot of times I prefer some options. I am playing some options, weekly options, mind you, on AMC just because I am kind of anticipating those larger moves to be happening here pretty soon.
Mm-hmm.
Um, but I do have some hedges. I have some puts just to kind of just in case to kind of protect profits or protect any type of downswing, right?
Yeah.
And it's not that I'm betting against AMC. It's just I want to be protected. So like the way you hedge against any position, you want to make sure that you're betting on the opposite side, so that if you do start taking losses on that other position, you're actually gaining that back in on the opposite end. So
Yeah. Absolutely. Yeah. Now I went ahead and just so we can kind of watch multiple tickers at once. I changed my view on Webull. Now, for anyone that doesn't know about any kind of like trading platform software, anything like that, Jay, your big thing is what, E-Trade, right? Isn't that what you use?
Yeah. So I have the E-Trade Pro platform. I think they have a new platform out. I can't remember what it is. I think it's Power E-Trade Pro,
Mm-hmm.
Power E-Trade, one of those. For me, I got used to the regular Pro platform, and I found that to be very useful. But I also use this platform right here that you guys can probably see. This is my Schwab. This is Street Smart Edge, and basically it goes with my Schwab account. So
Mm.
um, I like using this one as well. And the reason why I usually keep both up because I can watch multiple tickers at one time. Obviously, I mean people like spreading the screen into 4 different spaces. I'm not that kind of person. I'd rather have like one ticker on one screen so I can see it in a large view. But then also, what I like about the Street Smart Edge is that it actually has a block trade indicator. So when you see large prints come through, um, basically it'll tell you. So like for instance here, let me pull mine up. I have a couple of tickers that I've watched. So like the SQQQ, CEI, obviously. We're looking at some SQQQ buys here at 652 for 19,999 shares, right?
Mm-hmm.
So that's pretty large right there, if you ask me. Obviously, I'm looking at AMC. I'm looking at a couple of other ones, that you and I have spoken about. And then the other thing I really like about this software is that it will tell you if a stock is hard to borrow, meaning that it's heavily shorted. So if you're trying to short it, it's going to be really hard to find those shares to short, right? So obviously AMC is a hard to borrow stock. We've already speculated that we think it's a massively shorted position, possibly with billions of synthetic shares out in the market. And obviously we can't prove that, but you know, when this hard to borrow indicator comes up, that tells you like this is a pretty heavily shorted stock for sure.
Yeah. Yeah, for sure. Yeah, I mean, it's not just that one. I mean, dude, I was checking out like the Ortex data yesterday on BBIG, and it was on the content I put out last night. I mean, dude, their utilization was at 99.97%, and their cost to borrow minimum is at like 60 some odd percent for their annual interest.
Yeah, like BBIG, they are a hard to borrow stock as well. A couple of other ones. Let's see, ATER.
Mm-hmm.
Right now they have also it'll also tell you like regulatory circuit breakers, like a RCB indicator will pop up, and that's basically when a stock is moving, obviously, and it triggers like
A
a
halt.
circuit breaker. So almost like a major dip in the price or like a major upswing, either one of those, it'll trigger that circuit breaker indicator, right? Um, let's see, GME, so GameStop, that's another hard to borrow stock. We see that moving on the upswing, you know, just like AMC.
Yep.
SQQQ was another one too. That's hard to borrow. So that one's being heavily shorted. We know that one goes. That's an inverse ETF, and it goes opposite of the QQQ, which tracks directly with the S&P 500. So as the S&P 500 goes up, QQQ goes up, but SQQ will always go in the opposite direction. So that one's being shorted against as well. I would imagine this one's going to actually start running here pretty soon, which is why I'm glad I have calls that don't expire until next year on this one.
Yeah.
Because 15-20 bucks on a couple calls. I mean, we've seen the history back in a crash, and you and I have both spoken about possible crashes. So with all the news that just broke, especially this week. So I would imagine those are going to run here at some point. But manage your own risk. If that's what you want to do.
Yeah, for sure. I'm pulling up, man, these charts. So I have AMC, BBIG, Ethereum, and OCGN. And I'm gonna go back to like the 10-15 range, to see if we can catch some similarities. It looks like the similarities on BBIG and AMC, the dips and valleys look super similar. And then I would say on Let's see. Yeah, I mean, Oxygen's going to be kind of different. It doesn't look like it's running together. Oxygen's kind of forming a cup and handle right now.
Yeah, it looks like it.
But a lot of these, I mean, like you and I were talking about, a lot of these dips that happened yesterday were a lot, I think, because of the SPY and the inflation rate coming out. You know what I mean, to the public, that it was the highest it's been since 1990. Did you see that?
Yes. So that, yeah, I was actually, letting people know, like, hey, you guys need to kind of be ready because we are. I mean, dude, we talked about it. Like, it's very possible that we're seeing um, almost something that would rival the Great Depression or even the crash. Was it 1987?
Mm-hmm.
Yeah, like we're seeing something that would rival those two eras, and it's unfortunate, but I really do feel like, and I'm very convicted and convinced on that idea that we're gonna see something here pretty soon. And how soon, who knows? But it seems that you and I, we talked about Evergrande, the second largest Chinese real estate company, possibly going default, and literally they have defaulted on their debt yesterday officially.
Yeah.
And mainstream media here in the U.S. they
Hey, what was the thing that you sent me? It was, I thought it was from Reddit, right? Was it from God, who was the guy that you sent it to me from?
I have no clue what I sent you. When did I send it to you? This morning?
Yeah, it was from Dr. Quantrillion. So, for anyone that hasn't seen this,
Yeah.
so I'll read it. It's a Reddit post that happened, I'd say, I don't know, about 12 hours ago, maybe a little bit more. But
AMC's breaking to 39.80.
oh yeah, it's running. It looks like all these are running simultaneously. Ethereum's about, the 15 MA is about to cross the VWAP and the 200 EMA.
Yep, looks like we're getting another leg up. I mean, right now, all my options that I'm playing right now are green. I mean, not by much, but they're still holding green. I'm cool
Yeah.
with that, you know.
Hey, for anyone that's just joining, please don't forget to like and share the video out to the rest of the community. It helps people find the channel and the content, not only for myself, but also for Jay. He's with Flashpoint Capital. Definitely check out his channel. He's got a lot of knowledge when it comes to like credit cards and how to kind of take advantage of that situation to get the most out of not only building your credit, but also he's kind of like the call and put guru. I would say he's like my go-to whenever I have questions about it, because I still don't know a lot about it, but I try to learn as much as I can. So let's.
Yeah, man. I mean, I'm still, for me, I first started trying to learn stocks like a little over a year ago, and going on about a year and a half now. But for me, it was like, well, I about halfway through that, learning how to trade profitably at least, I came across options, and I was like, well, what are options and what can you do with this? And I literally watched this whole kind of what would you call it? Almost like a seminar, right? Where this guy was just like, oh man, options. He's like, I once put 50,000 on some options, and they were set to expire that day. He goes, man, I was over here thinking I'm about to be down 50,000. He goes, 15 minutes before the market closes, the stock runs, and my options go in the money. And I'm sitting here like I have no idea what he's talking about, right? By the way, no idea what he's talking about. And he's like, my options are about to expire. I'm about to lose all my money, or not all my money, but on this trade. And he's like, options go in the money, and it actually surges in the last 15 minutes by $20 or something like that. He's like, I end up profiting like $400,000. I was like, what?
Dang.
I was like, what? So then I started testing it out. I just started dabbling in it, and for me, it was more of reading the stock chart. Okay, by the end of this week, where do I think? And I started with weeklies, which are risky, super risky. I started with weeklies, and I started, when you don't know what you're doing, you end up going for what's the cheapest.
Mm-hmm.
Like, oh, well, the further out of the money calls are going to be the cheapest, but you don't know that it's like you're fighting a lot of different factors when it comes to the Greeks in your options. So you're fighting theta decay, you're fighting your delta, like everything just kind of comes into play. So it's like I was losing money, then I was like, damn, like, okay, maybe I just need to go ahead and start like studying this stuff. And then I came across unusual options activity. So I started coming across unusual options activity. They call it following the smart money. And basically that's really where I kind of started going. And you know how some people, they follow like the politicians, and if a politician gets in on a certain stock, like you almost know for sure like it's gonna pop because a lot of them are inside
Yeah.
traders anyways. So it's like Nancy Pelosi, like she is like the best trader in the world, like compared to pros. Like I haven't seen her fund take any losses like ever. So
I mean, a lot of that stuff, I guarantee you, it's like people that are pushing, the agenda, at the Supreme Court level. And she's like, yeah, I already know that I'm going to go ahead and approve this, so I'm going to go ahead and buy the stock.
yeah, exactly. So it's like before she signs something, she's like buying it, and then all of a sudden it's like, oh well, I made me a nice little $900,000 profit. I'm leaving. She's
Mm-hmm.
worth like something like 200 million or something like that, and it's crazy. By the way, speaking of Pelosi, her husband's fund just loaded up more. They increased their position in AMC by 19% yesterday.
Whoa.
Well, maybe the day before yesterday, sorry, because the 13F filing was posted yesterday, but it could have been Monday or Tuesday, with today being Thursday, obviously. So, yeah. Yeah, man. So, that says a lot.
I'm trying to look at these technicals. So, for those of y'all that can see, so let me go over to AMC real quick. So it looks like we need to have a clean break over like 39.86 or so. It looks like we tested it and broke briefly, got to 39.96 and then rejected. If we can consolidate at this level for the next 5 minutes, that should bring us this $40.22.
We're sitting at this 30.96.98. There we go. I mean, it made a new high for the day, so that's solid.
Let me check out.
MACD just crossed on the 5 minute. Looks solid. Let me look at the 30. 30 still looks good. Like we're still looking at upside. It's not even remotely coming close to curling. Even on the hourly looks like it might be all upside from today too. Because it's going to take a large move to the downside for that hourly candle or that hourly MACD to curl back down.
Right. Yeah, I know the.
There we go. We just hit 40. We broke 40 actually. So technically, it's a technical breakout, but with you and I, we like making sure that it's holding at least 5 to 15 minutes of a candle, above that price level.
Yeah, because so for anyone that's new to trading, so whenever you have like a technical breakout over a line of resistance, what you want to do is see, like, for instance, if you guys can see what I'm seeing, this orange line here. So this was that breakout point, and now we're bouncing off of it with these candles here and establishing it as support. So that's essentially what you want to see. And that's when AMC is not being manipulated and running like normal. That's usually what happens, is it'll skyrocket for 2-3 minutes, and then it'll start to consolidate and build support and then run again. So hopefully if we can go back to those same trends like we did, around Memorial Day, I mean, shoot, man, sky's the limit if we can continue this.
Yeah, I mean, honestly, I have some $50 calls that expire next week. I have some 40s, 42s that expire this week. I went ahead and followed that trend. I took a small position on the 42s, just kind of, I took a small position, just kind of taking it with a grain of salt. Like, yeah, this could be something here. If it is, it'll pay off big. If it doesn't, then I risk what I'm willing to lose. You know what I mean?
Yeah.
So I'm not sitting here like, throwing the kitchen sink at it because I saw someone else buy 20,000 options contracts. That's just not what I do. For me, it's all about mitigating your risk and making sure that you're keeping it to a minimum. Like, and I've always told you that. Like, for me, I used to make the mistake of, man, I'm going to put my whole portfolio into this one play because I really do think it could do something, and then I end up taking much larger losses than I should.
Yeah.
So for me, I'll take a small position, small options position. I mean, I think the calls were going for like $40, so I bought 3, so $120 risk for a potential. Let's say it goes to 45. I think the when I calculated what the profit would be, it was going to come out to like $400 per option. So that would have been a solid $1,200 profit on $120. Fine, I'll take it.
Yeah. Yeah,
if
that's
I lose it,
nice.
Then, that was what I was willing to play.
Mm-hmm. Yeah, I mean, it's, again, so for anyone that's never traded calls or puts, so it's a lot like gambling on like a spread for like sports. I mean, that's kind of the way that I look at it. If you're trying to simplify it, and basically you're anticipating a stock to hit a certain price, whether it be up or down, and that's what's called your strike price. And then you're fighting against theta, which is the time decay, and that's, correct me if I'm wrong, now that's the amount of money that you lose per day, right?
Yes.
Okay.
So theta, basically theta is almost like, it really just depends, because when you get closer into the options, like expiration date, theta is obviously a lot smaller, but it's almost like your time premium, So
Yeah.
like let's say like you have $40 calls that expired, next October, right? You're looking at almost a year's worth of premium that you'll end up paying, and most of it you're paying for time. You're not really paying for that intrinsic value. So they'll set the price. Let's say they'll set the price for an option at $80, right?
Mm-hmm.
And your premium could be like maybe $2 or so, right? So then your overall value for that you're paying is $280.
Yeah.
So that's kind of what you end up dealing with in terms of like your premium and your theta. But sometimes it's beneficial to have further out calls, and if you're just beginning, I always recommend taking leap options anyways. Just pay for the premium because you don't really know what you're doing at that time, and stocks over the course of a year make large swings, like no matter what. So if it's relatively cheap to buy something that's further out and you can buy it closer to where it is at that specific price, I wouldn't say go way out of the money because it's not always guaranteed,
Yeah, for sure. Now, what do you think, in terms of like these heavily shorted stocks, do you think that they're all going to run simultaneously, or do you think one is going to run and then it's going to trigger the rest and people are literally going to take those gains and start letting all the others run?
Yeah, I feel like it is going to be like a ripple effect. I feel like one's going to go, and then after that, the next one's going to go, and it's almost just going to be like I guess, in my opinion, this is my personal opinion. I feel like it's almost going to be like a tiered thing. You know what I'm saying? Like the most dangerous ones, they'll let those go last, and they'll either go last or they'll go first. Just
Right.
to either get them out of the way, and that's it. And then the smaller ones that really are kind of insignificant, they'll postpone those, hoping that some of these people decide to pull their money out of those shorted stocks and cause those prices to go down so they can close those positions at lower risk and start trying to FOMO into these squeeze plays, the ones that they're squeezing like just ridiculously fast.
Yeah.
So where are we sitting at on AMC? I know you like doing your zones, your lines.
Yeah.
Everything is really strong in my opinion.
Yeah, so I mean, we're just building and establishing that support around that 39.84, 39.85. Honestly, it looks like the RSI just needed to cool off. So now it looks like we're going to try to make another run at the intraday high of $40.02. And if we can, keep running and build that momentum, then we'll see $40.22 today.
You think 40.22? I was actually thinking 41.50, but
well, no, I'm just saying like that's the next level. I'm not saying like,
okay.
Yeah.
I honestly was thinking we closed around 41.50, but that's me, dude. I don't consider myself the greatest trader in the world by any means. For me, I just like looking, just trying to see where the stock is in the
So
very,
41.50, just based on what I'm seeing, I'm looking at the 30-minute. 41.50 is doable, but we have to get a clean break over 41.25. 41.25 is going to be a significant level of resistance. I mean, we have just over the last 4 days, we have, let's see, that's 5, 6, 7. Well, there's 8, 9 different touch points just based on the last 3 days. That's not including anything previous. So,
and for me, you know how I like playing this narrative that the cycle is almost going to be exact, right? So I feel like we're here this cycle. If anybody can see my screen, I feel like we are right here in this little area, the last dip before that spike up towards the 50s. Then we see a little bit of consolidation at the top. You see a last shakeout, to try to scare people, and then we see this run. So we're like almost near the end on this next run on AMC. I feel like this is being sped up though, just a little bit, in my opinion. I feel like yesterday we kind of bottomed out in the after hours, and the sad thing is the daily candles won't show the after hours. You have to look at the minute candles, the 5 minutes, the hourly candles, things like that, in order to see that this morning, even yesterday, it touched 36.70, I believe.
yeah.
Yeah, so to me, that's the bottom right there. That's where it bounces off of. And if you look at where the support level was, it's around 36.40, 36, like 36 and change. And it bounced off of that. To me, we're already starting to reverse in the other direction. But I could be wrong.
Yeah, I mean, I think we still have a little bit of retracement that could come. And that's just if it hits the bottom of that daily pennant. If it hits the bottom of that daily pennant, we're looking at like mid $34 and then a bounce. I mean, because that's kind of what we're doing. If for anyone that hasn't looked at the daily, we're kind of coming to the end of that pennant. In mine, I mean, everyone's different. Everyone kind of forecasts different breakout points or when the end of the pennant is. As of right now, mine is hovering around almost the middle of January. Is like and that's where the point is. That's not. I mean, it could break out sooner than that. That's just where the end of it is almost the middle of January.
Yeah, I mean, it looks strong though. Either way, even if it were to take another dip, I mean, yeah, I really do feel like, let's say it were to take a dip, yeah, well, all right, so if it touches, and on my chart at least, if it touches the pennant, are you talking about the pennant on the daily?
Yeah. Mm-hmm.
Yeah. Okay. Yeah. Let me see where. See, the lowest I have is in the 37s. That's just what I have in the 37s. You're saying mid 34s? That seems feasible. I I can see where you see that because, well, actually, so if we're looking at, I see where you're looking at the 34s. Okay.
Yeah, and that's just because there's more room for it to fall. I'm not saying that it will. I'm just saying, I'd rather kind of expect the worst in terms of it falling and be like, okay, I kind of expected this. It's like last week when I told you, I was like, I'd expect a retracement, down into that 38 range.
If it did decide to go ahead and take another dip, I would see maybe 37.23 as a level of support, possibly. Yeah, that'd probably be the strongest level of support for me, at least.
All right, let me see here.
Maybe even 37.04 at the very minimum. And that's where it would bounce off of that. To me, that's where it would bounce up.
Yeah.
But that would be saying that, today we don't finish green, or tomorrow we don't even finish above 40, right? Then we could see some of that going into next week. But next week, I really do feel like we see 50 for sure if we don't see it today or tomorrow, right? And today's a stretch. Tomorrow, stretch. But in my opinion, if we end up with this inverted hammer candle, right, and then we end up with this, on the daily, we end up with this, bullish engulfing candle. To me, that's a pretty decent sign of a reversal happening, and maybe they speed up this cycle because if with Evergrande news coming in, offshore bondholders are, dude, I guarantee you there's something taking place right now to try to manage that risk right now as we speak. And the government's just not trying to say anything. They're not trying to incite any type of panic. Things like that. Like, I just feel like that's, well, what'd you do to me?
Whoa.
Went full screen.
There we go. Sorry. No, I was trying to figure out. We had a comment. Someone was saying that they couldn't really hear you, so I had to go in and check the volume. But my volume's turned all the way up, so it might be yours.
Yeah, I turned up my microphone.
Okay.
Trying to.
Tammy, let us know if that's better.
Just let me know if you guys can hear me or what's going on. But I think what it is that I was talking away from the screen, or talking away from the mic when I was talking about this, platform that I was using over here on the right. But I have my other one right here, so it should be good.
Cool.
Moving forward, yeah.
Let me see. I do want to do an Ortex check for anyone.
Go ahead. Yeah.
Let me see here. All right, so it's not really going to have a whole lot updated because of the holiday, I believe. So let me see what I can pull up though. Ooh, utilization went up.
What's up?
Utilization's up to almost maxed out now. So what I'm looking at is BBIG. So looking up here, so it's 99.98% there. Cost to borrow is up 17%, currently at 57%. Days to cover is, huh?
Go ahead. No, you go. Go ahead. Go
I was
ahead.
saying days to cover is also up 5%. Shares on loan up 7. Free float on loan up 7. Estimated short interest percent is at 14, and the exchange reported short interest is up over 12 and a half. Yeah, I mean, but dude, so like the last settlement date, this data was released on the 9th, and the settlement date was the end of October, but it was 28.27 million shares short, and that was it was over 30% of the free float was short.
Oh shit.
And that's for BBIG. That's not even like pulling AMC or anything else. So
That's insane. That's insane.
AMC is still climbing, so 94 million shares short, which is roughly 18.5% of the free float. Now, guys, remember, this data is self-reported data, and it's only pulling from 85% of the exchanges. Now, it's not the best method to be able to access this data, but it's really kind of it's the best that we have access to currently. But that's exactly why, the whole 8 movement, with Trey and Matt and all these other guys, they're fighting for transparency in the market because of reasons like this. Like how can you feel like you're educating yourself wanting to invest into the stock market if you're not given all of the facts and data, right? I mean, it's like for me in real estate, if somebody's trying to buy a house from me, like the way that I sold houses was literally I would present all of the facts, lay it out on the table, answer any questions. That way the customers felt comfortable with me asking questions because I was their go-to to get that knowledge. You know what I mean? And it's the same instance with the stock market. We need to be able to have that information readily available so that we can feel like we're making the most educated decisions for ourselves in the future, Let me see. Yeah, so AMC's down on those, but it's really not a whole lot.
It looks to have found like a strong little support level at that 39.74, 72 level.
Mm-hmm. Let me switch back.
It seems to just kind of be holding that level. Like right now, it's just been 39.72, 70-ish. Seems to bounce off of that one real nice. So we might be looking at some positive things moving forward. So we'll see.
Yeah, looking at so like right in here, 39.68 is where it's bouncing. So zooming in real quick. So it's right in there. So we need to, let me go ahead and remove this guy. And I'm a little OCD looking at my charts, man. I gotta color code shit.
Hey everybody, can you hear me? Can you hear me? Talking to you. Can you hear me?
It's probably better this way.
Yeah, Tammy, if you're still watching, let us know if that's better, if you can hear him.
I have the stand. I'm trying to adjust it, but it's like so tight. I don't know what the hell. That's what he said.
Yeah, I had to like adjust the settings on the back of my mic manually to make it.
No, but like this little knob right here, I can't even twist it. Is what I'm saying. Because then I can just adjust it up and down and actually have it at a proper angle.
Yeah.
Right now it's up like this, so I have to kind of tower over it, but I don't really want to do that. So maybe if I just have it in the picture, it's okay. Just pull it up a little closer to me. It's fine.
Yeah. Hey, and as a reminder, guys, anyone joining us, don't forget to like the video and share it out to the rest of the community. Also, if you guys want to interact with us, please definitely drop some comments in the chat, or if you want us to check out any other companies that you're looking at and are interested in getting into, want us to do some technicals, or have Jay check out the option, like the open interest and things like that. Definitely drop in the chat so we can have an interactive conversation with you guys. I think AMC is going to have a dip, man. It has some.
Yeah, it's showing it on the 5 minute. It is. It's showing on the 5.
Well, the RSI we have bearish divergence. I think we're gonna I think we're gonna dip back into the 37s.
Yeah, you could be right. It's to be honest. But if we're looking at the MACD just for today, I mean, in my opinion, I feel like we still kind of push up into the 40s before we finally start dipping back down. I agree with you. You know, I mean, bearish divergence, you're always pretty spot on with that as well. I just think what it does is this is almost like a kind of like an enticing moment to try to bring people in and then shake them back out. You know what I'm saying? But you know, I've seen all these comments like, don't these people know I eat crayons, and every time they dip I panic and I buy more. I'm like, I really don't think that these funds know what they're really up against right now. And
yeah.
I mean, you know, in any other era of, you know, if you wouldn't have left these people inside their homes and going crazy and dealing with their emotions and things like that, you know what I'm saying? Like all this psychological warfare that they were pulling with these, you know, quarantine times, you know, and these lockups and things, people found trading. They're like, well, hey, you know, let me figure this out. It was a smart thing. They created this, you know, because if you think about it, there wasn't as much participation until all these markets started crashing. Now everybody has access to these free apps, so to speak, right? I mean, they created a monster. That's their own fault.
Yeah, for sure.
We just so happen to be able to take advantage of it this time, you know, because I always think back and I'm like, damn, how awesome would it have been to take advantage of that '08 crash, right? Like if I knew SQQQ was going to 110,000, dude, I would have bought freaking, you know, or 110 plus thousand a share. I would have bought freaking like 20 of them at, you know, $6 or $8, whatever it was at. Even 10, I would have bought 20. That's $200 as a college kid.
Yeah.
What?
Yeah, I don't even know. I think I have like 12 right now.
Yeah.
And I'm just holding it. Like I've invested that money into it and have been like, you know, I'm never going to see that money again. And if it pops,
Yeah.
then even better.
Yeah, for sure. Like, so I'm pretty much the same, and then I have my options. So like the options that I bought $10, $11, and $15 strike prices, and they don't expire until next year. So it's just like, you know, you never know. And to be honest, I did the calculation. Let's say this thing were to go crazy, and you know, history has pointed out that yeah, it does have potential to go crazy when the stock market does crash, because it goes opposite of what the market does. As the market crashes, this thing goes berserk. So, I mean, dude, those options would print, because let's say the stock even goes to 200, even 300, right? I have $10, $11, and $15 strike prices. That is like almost a couple thousands of %, you know, over what I figured it would go to, right? So
right.
It's like I'm literally not worried about it, and those options cost me like $15. So $15 is like, you know, that's basically what I paid for food last night.
Hopefully not for just you.
Yeah, that was just for me.
Damn, son.
Yeah.
Getting that filet.
That was for me. Yeah. No, overall it was probably like a $45, $50 meal, but
man, I'm not gonna lie. My lazy ass has been door dashing all the time.
You know, I thought about that, but then for me it was just like, damn. Like the fees are just crazy.
Yeah.
It's like I once did. Let me see. There is a Velvet Taco down the street from me, right? Literally, like it would take me 5 minutes to get there, right? I tried to do a Uber Eats deal, and my food was gonna come out to like $29, right? On top of that, with the delivery fees, and then I'm not gonna not tip a driver, right? That's what they're living off of. It was coming out to almost $50. I was like, what?
Yeah.
All it has, I'm like, this is 5 minutes down the road, if that. Like, I could jog there and pick it up and come back home. That's how close it is. And you're going to tell me it's almost $20 to have it just delivered to me? Yeah, you're paying for the convenience, but for me, I'm just like, you know what? Just give me the damn keys. I'm going to go get it myself.
Well, yeah, I mean, like for me, it's like I view it as like, how much time am I going to spend either in line or waiting for the food to get done? You know, and like if that cost offsets what I'm paying in gas to get there and to sit, then yeah, I'm like, okay, that to me that's worth it. Or, I mean, granted, you only have one kid, I have three. You know what I mean? So like, if there's just no way that I can leave the house, then yeah, I'll do it. But yeah, man, it's definitely something crazy. I mean, we even noticed, dude, like going through like Shipt to have groceries delivered, and then now like we've kind of steered away from that, and we're just ordering directly from HEB, and HEB's delivering, and it's like 40% less expensive than it would be going through Shipt. So we just couldn't figure out. We're like, man, how are we spending $250 on groceries every 2 weeks? Like, it made no sense. And then and then when we started ordering from HEB, it was like $160. We were like, what? Like,
Yeah, you found that problem. The one thing I don't like about, I guess, ordering online was I found that, let's say you wanted to buy a package of meat, right?
mm-hmm.
And, you know, obviously there's other meat that's like priced at different, you know, per pound or whatever have you. You're getting charged this like a generic number regardless of what the package says. Like, I remember one time my order, I had bought like, I don't know, like these huge packs of chicken, right? They were all various different prices, but then whenever I looked at the receipt, they were all priced the same. I'm like, how does that work? Like, is that like you guys take that cut off the top from that, or what's going on?
Yeah, I don't really know how it works, man, but to me, we kind of found the way that we're going to go moving forward, and that's just ordering directly from HEB. And if, you know, worst comes to worst, I'll just go pick it up myself.
Yeah, dude. And then for me, my worst come to work. Well, for me, you know, once I go ahead and profit off of these options, that, in my opinion, I mean, they're a given. You know, I'm already up 100% on my investment on these newer options that I got. I put in $1,000. I'm already up 2,000, right?
Mm-hmm.
You know, the stock is nowhere near where my strike price is. Like, not even remotely close. Maybe a third of that. That's where it's at, right? It's at a third of where my strike price is, and I'm already up $2,000 off a penny's move. That's why I love options. The more you get, the more you're willing to risk, as long as you're sure that you're going to profit off of it. Like, I'm already up double my money off of pennies, you know? That's why I love options, because, you know, there's so many different factors that play into the pricing of how much they're valued at, right? Like $40 calls. Like, I remember I bought four call options on AMC on the $40 calls. It shot up to 72. They were worth $8,000 a piece. I paid $200 for those things. You know, I mean, where in the world can you find the ability to be able to spend $800 in total for 4 options, and then at the end of the day, it just makes some crazy run, and then they're worth $8,000 a piece? Like, that's, you can't.
Yeah.
You can only do that here. That's why I love the market. I mean, this is free money. This is how you make your money work for you. You know?
Yep.
People always say work harder, not smarter. This is working smarter, right? And yeah, obviously you got to have money to be able to do it, but you know, once you learn it, I don't consider myself a master at trading by any means, but I still consider myself a novice, to be honest. And I feel like I know a significant amount, you know, compared to most people.
Yeah.
And I'm just like, dude, like, if you're willing to do it, just do it, you know? Learn it, spend time reading books. Like, One really good book. As a matter of fact, let me show some of your people. I actually found this. I came across this when I was searching for options, and it literally, this is what helped me identify unusual options activity. And John and Pete Najarian, they're actually guys that played in the NFL. Well, at least Pete did, and he played for the Bears, so that's how I'm familiar with him. You know, me being a Bears fan, but you know, they're really good at teaching. You know how. I'm not getting promoted, you know, to promote their book or anything, but you know, that book taught me a lot on unusual options activity. So, you know, they have their own thing that they like to promote. I didn't do that. I figured it out on my own how to search for unusual options activity, and yeah, I mean, you know, it's usually a pretty significant way or a pretty good way of how to profit before you actually know anything, right? So
Yep.
like I started following the smart money and I was profiting. So it was just like, hey, the other thing is too is you can't get greedy. So you have to, you know, you have to be a disciplined enough trader to just be like, yeah, take these profits. Who cares if the price continues to go up? Take the profits and, you know, move on to the next play.
Yeah.
Find the next one. Find the next one.
Yeah, you have to be okay with exiting a position.
100%.
Yeah.
And I learned that the hard way. I learned it the hard way because I had 10 options on, what was the play? Oh my God. I think it might have been Gap. I had 10 options on Gap, and they were like the $15 calls, right? Out of nowhere. I ended up buying those 10. Stock runs up to like 17 or 18, I think 20, and I held like an idiot. I was up maybe about $7,000, right, on those calls.
Mm-hmm.
And then all of a sudden, the very next morning, I wake up and the stock is gapped down and it's just getting hammered. Drops all the way back down to $15, right? I'm actually losing money at this point. And then because I bought weeklies, I started taking on time decay because then it started getting closer to the expiration date, right? And so they started becoming less and less valuable. And I actually ended up going from a potential $7,000 profit because I decided to hold those options. I got greedy, right? To taking a $125 loss. I was kicking myself in the ass so hard for that one. It was the worst trade I possibly could have ever made because who the hell would want to take a loss when you were up almost 7,000?
Oh, dude, don't get me started with the worst trades possible. Because I was in OCGN and GEVO last October. OCGN, I had 2,000 shares for 29 cents and I sold, right? So 2,000 shares for 29 cents. The price that it's at right now, it'd be 17 grand. I'd be up.
Yeah, that's tough.
And then GEVO, I was in at 97 cents and I had like 1,500 shares. And GEVO right now is at $7.52.
Dude, that's tough. That's real tough right now. I don't know.
Yeah, it's brutal. Let me see. Trying to see if there's any news coming out in the Twitterverse. Real quick, guys, if y'all have any companies you want us to check out.
AMC looks like it's just creating another kind of pennant, so to speak, you know, on this next leg. Smaller, you know, but it looks like it might be creating a small pennant, you know, with a slight breakout. I mean, who knows? I could be wrong. Like I said, I always feel like your analysis or your charting is a little better, well, much better than mine, to be honest, and I'm okay with that. I'll master it at some point, you know.
Let me see.
But looking at MACD looks like it might be curling back up on the 5-minute. Hourly still looks good.
Yeah, it looks like we have a little bit of one.
And the 30-minute looks solid too. Looks like we just have this little stair-stepping, it's fighting for sure.
So
Midday breakout maybe? 1 o'clock? 1:30?
I don't know, man. This to me looks more like an ascending wedge, which is bearish.
Yeah, it really does. It does look like an ascending wedge for sure.
So that right there, I don't know if you can see on mine.
Well, I mean, I know what you're talking about. So, like, if I'm drawing my segment lines, you're looking from here. Well, come on. Let me draw. There we go. You're looking from here. Dude, what is going on? You're looking from here to here. Right? I mean, the one thing I don't like about this software is that I can't drag the screen over, right? Like it goes exactly how the ticker, like, that candle is your limit as far as you can go.
Yeah.
So, like, let's say for instance, let me go ahead and bring my other chart over here, right? With this chart, if I wanted to do anything, I could drag it. You get what I'm saying? Like, I literally cannot do that on my Schwab platform, which I wish they would make that modification on the software, because that would literally help the charting, for charting purposes, obviously, for things like this, and you're looking at this, I'm assuming here, this ascending wedge pattern, which will probably, I mean, if it breaks down, you're probably looking at something significant right there, maybe.
Yeah, I mean, I'm looking at like a 5 minute, and I notice how, we're still in that bearish divergence.
Right. So I think this is what you're looking at. Yeah. I'm looking at the 30-minute, but yeah. So I see it. So a breakdown out of this would obviously send us back down, which would cause all the other indicators to start curling, a little bit more rapidly. But
yeah, and with the MACD currently under the signal line, I mean, it kind of makes sense that there's going to be a sell-off coming.
Yeah, well, you think about it. If we're looking at yesterday, as a matter of fact, I honestly thought we were going to break down from this one, because we had the same. We kind of had the same scenario. We pushed up just a little higher, which is what I feel like may happen. We could break to the upside on that one, and then all of a sudden have that breakdown and have another sell-off just like that. So to kind of create that false, hype that, oh, it's breaking out, even though it's a bearish pattern, we're still breaking out and causing people to buy higher, and then literally come back down, sell low, because they're like, man, we're taking losses. What the hell? Also, VIX is down. Dow Jones is down. NASDAQ looks like it's holding on to very small gains at 105, and then the S&P is by the skin of its teeth, man, like $5.
Yeah.
That it's holding on to. It's possible that they finish red by the end of the day. A lot of times when I see that happen, like when they're struggling to hold on to gains, they almost always end up red for the day. And with this whole Tesla, selling 10%, of the company, Evergrande, all that stuff, I feel like that's another issue.
Hey, do me a favor real quick. Check out the open interest on the puts for OCGN, that for 11/12 expiration.
11/12?
Yeah, for an $8 strike.
$8 strike. 11/12 would be open interest?
Yeah.
There's only 1,000. It's nothing very unusual. The 850, however, is it would, if you're going based off of what unusual options are, it would technically be unusual options activity, because there's 655 open interest, and then today alone there's 2,629 in volume, which meets the standard. So when the volume is significantly higher than the open interest, that's when you know someone's either loading up on something or, kind of expecting it to at least go past 850, at the very least. And then they're also priced at a decent price as well. So like you're looking at between $29 and $32 for an option contract at the 850 strike, which at the moment is in the money.
Yep.
Another one would be, let me see if there's any other ones. Yeah, that'd probably be the only one. Yeah, $9 strike. It's kind of a push, but yeah, that'd really just be it. To be honest.
Yeah. For anyone that's just joining us, welcome to the channel. We got Jay with Flashpoint Capital here joining me today. Please don't forget to like the video and share it out, on all your social media platforms so we can get more people in here. Also, if you have any questions or comments, don't forget to drop them in the chat. We'd love to be able to have an interactive conversation with you guys, and also, just talk stocks in the market and, everything all together. Let's see. Dude, like a month ago, I told my buddy, I said, don't be surprised if GEVO hits $9 by the end of the year, and it's like slowly been working its way back up.
Yeah, man. I mean, it's tough. Well, hold up. Actually. Oh, okay. Yeah, so check this out. There's 17,000 contracts traded at the $40 strike today on AMC.
How many?
17,000 just today.
Oof.
Traded. Only 11,000 open interest, so that would be kind of something as well. Let's see, what else? Yeah, 41 strike as well. And 42 strike, another one. About 11,000. Not too bad. What I'm trying to figure out is why are these higher, way out of the money calls, just having any kind of flow? To be honest, because there's 50 strikes expire tomorrow.
Yeah.
That's a reach. Stocks at 39 right now, heavily manipulated. Is probably going to end up going down based off of technicals, based on indicators.
Holy crap. Have you seen Root today, dude?
Dude, I've been watching Root for a while. Remember, I had a position in it. I took it out because I wanted to do other things with it that were going to probably move a little faster. But Root was like a solid squeeze play that I was looking at.
Holy crap, dude.
Yeah.
That is just filthy. From 463 yesterday to 625 today.
Yeah.
Ugh.
I mean, it ended, and then all of a sudden just started spiking.
That's nuts, man. Yeah, it topped out yesterday at 548 and then sold off, consolidated, dipped in the morning today down to 508 and then ripped from there.
Yeah, the highest it's gone to 625. It's just kind of holding, but I mean, if I'm looking at this thing,
what's its all-time high?
Its all-time high is
29.
Well, 25 was the 52-week high.
All right, so that's right there, yeah. Yeah, man. If you go back to the daily, dude, and you look at the RSI, I mean, this was kind of primed for it. It's in bullish divergence on the daily.
Yeah, and then the daily MACD is just nasty spike because of this price. But the volume too, it's at 25 million in volume, and normally, I mean, I would say it's probably averaging around 7. Hey, volume is 4.5 million.
Hey, I do need to jump off here. I got to go pick up a dog.
worries.
But guys, I want to thank you all for joining us. I am going to be posting some content later tonight. Hopefully we can do this again tomorrow, Jay, maybe on your channel.
Yeah, for sure.
Yeah,
For sure, man.
But yeah,
I'm always cool with that.
yeah, we'll see you guys on the next one. Thanks again for joining us.
All right. Peace out, guys.
Later.
Later.